Good morning. Welcome to IG's early morning call. It's Thursday, the 11th of January. Let's take a look at what we got in terms of some of the moves on the markets in today's session. The headlines coming through on equity markets with the rally on the Nikkei 225 continuing. It's now burst through the 35,000 level for the first time since February, almost 3 decades ago. Investors reassessing the Bank of Japan's impending move after the earthquake recently and that weak wages data that we have seen. US inflation, well, there's more work needed according to this man. It's John Williams. He's the New York Fed president, and he says it's still too soon to talk about interest rate cuts in the States. And Bitcoin, it's happened. ETF has been approved by the Securities and Exchange Commission, the US Securities regulator. 11 products, most of them expected to start trading today, have been given the green light. So let's take a look at volatility. 1, 2, 3, 4, 5 days on the way down now. We are at the lowest we've been at since the middle of December. So we're very close to 1 month lows on volatility, which explains why people are happy to take on risk. And here we are on the London markets. You can see quite clearly this green candle here indicating the move up that we've seen. And in fact, we're well above even the highest point we were at yesterday, despite the fact we got a drop when all was said and done in yesterday's session. We are expecting a stronger open, not too far away from the 7,700 level. Not quite as high as the top of this blue box here, which is where we finished out 2023. So we are still down for the year, but it's not the case in Germany. We are now up on the year overall. It's been there in this sort of territory before. 16,815, big strong day expected at the start today. And the markets in Germany continue to outperform pretty much everyone else around the region. You can see the French market still languishing below the close we were at the back end of 2023. But nonetheless, second day in a row of gains on the French CAC 40 expected. We're currently trading the highest we've been at in more than a week, 74.84. So you get the drift with the moves in the markets at the moment. And this was helped along by what we saw overnight in the Asia Pacific markets, especially for the Nikkei 225. In fact, we were more than 3 decades at a high level on the Nikkei, at 1.77% as at the close. Market reassessing the Bank of Japan impending rate moves. Recent data showing real wages shrinking for the 20th straight month. Quick update, Hang Seng stock index up 1.6% when last looked. That market still has a little bit of data to income on the cash session today. The close on the S&P ASX 200, we were up 0.5%. I want to show you this chart. This is the Nikkei 225, blue box, indicating where the market was at the close of 2023. So we've been up pretty much right the way from the opening of the 2024 gate. There was an initial pullback, but of course that was a holiday in the Japanese markets, but nonetheless we had 24-hour trading on Monday, 1st of January, and then coming back in earnest on the 4th, where we've seen this market move higher. 35,351 is where we're trading at the moment. We are now at the highest level we've been at since, you've got to go all the way back to the February 1989 levels. Meanwhile, I want to talk as well in the context of this chart as to what's happening with the backdrop, where the Bank of Japan is expected now to potentially delay any move to restrict monetary tightening. One other thing I think is worth mentioning as well, Japan's Financial Services Agency has ordered SBI Securities to halt some operations in the country. An investigation panel back on Friday last week recommended administrative action be taken against SBI, saying this brokerage, which is Japan's largest online securities broker, had solicited and accepted buy orders meant to inflate company share prices after initial public offerings. Those were the allegations. Today, we've seen the Japan FSA ordering SBI Securities to halt some operations. Let's take a look at what's happened yesterday as at the close on Wall Street, where the markets showed that we have a resilience continuing, especially for tech stocks. The Nasdaq up 0.75% in the session in yesterday's trade. It's worth looking at where we are in the 24-hour markets, because the Dow is now, as of indeed the close yesterday on the 24-hour markets, up above the top of the blue box. So we are now positive for the year. But I think more importantly, 37,815 had been the previous full-time high, and we are not too far away from that at the moment. We've got about 6 or 7 points before we reach to another all-time record high for the Dow Industrials. Will we get there before the markets open today? Looking for a stronger start when trade gets underway later on. S&P 500 moving up again. Let me just take that fib off. So you can see again, we are better than we were at the back end of last year. Record high at 48.18, 47.97 is what we're trading there. We've got to bear in mind these markets are all trading before the inflation data out a little bit later on today. As of the close of the 24-hour markets on the Nasdaq, again, that one also now up positive for the year so far after that pullback we saw in the first week of trade. So there has been a recovery, and we're building on yesterday's rise with another green candle there. Again, not too far away from record highs on the Nasdaq. Take a look at that US inflation data in just a minute. Let's pick up on what's been happening overnight in Australia. The trade surplus rising to an 8-month high in the month of November. Let's take a look at the data. Widening to 11.43 billion Aussie dollars from 7.7 billion in the prior month. Now, that easily beat market expectations, an increase mainly due to a 7.9% drop in imports. Exports up 1.7%. Let's take a look at what's happening on the Aussie dollar, which in the context of a weaker dollar, not surprising it's up, but it's relatively strong for a second day in a row, 67.19. If you're long on this, stock goes underneath this area down here at around about the 66.70 level. If you're long on Aussie against the US dollar. But of course, all that has still very much to play out with all about that CPI data out later on today in the States. Let's take a look in some more detail about what we're expecting there for the US inflation, because that could well be the pivot point. At the end of last week, I'm going to show you what's happening with the dollar basket. At the end of last week, this move that we saw, the dollar was shaken by a stronger than expected jobs report. Now, if the labour market is no longer as tight as it was earlier in the year, job growth remains solid, which leads some economists to revise their Fed funds rate expectations for the year. Now, you can see that we're down for a second day in a row today. We are outside this prior channel that I was talking about yesterday, where we saw a successful close above that. So are we now entering a new phase for the dollar? 101.87 is where we're traded at the moment. It will be tested once again this afternoon with the publication of that latest US inflation report. Headline CPI expected to come in at 3.2% year on year, one notch higher than the prior month. Core CPI growth is also expected to decelerate to 3.8% year on year from 4% in the prior month. Now, yesterday, the New York Fed President John Williams said it was still too soon to call for interest rate cuts. He's concerned about the fact that inflation is not coming down fast enough. And he said the central bank has still some way to go to get inflation back to its 2% target. Let's take a look at a quote we saw from Williams yesterday. He said, "I expect we'll need to maintain the restrictive stance of policy for some time to come to fully achieve our goals. And it will only be appropriate to dial back the degree of policy restraint when we're confident that inflation is moving towards 2% on a sustained basis." Now, let's take a look at what the trade is around this, because euro dollar is the way to trade this. This is an inverse of the dollar basket. So it's no surprise we've seen a second day in a row of gains for the euro. If you're long on this, stock goes underneath the deep candle we saw, when was that, last Friday on that jobs report day. So you'll stop at around about the 108.70 level. 109.982 is where we're trading. This is an area of interest for me, which were the highs we had back on the 29th of November at 110.17. You get a candle close beyond there, you're then on the way up to 111.40. Now, this would indicate strong euro against a weaker US dollar. And I think for that to happen, we're going to have to get a weaker print than had been expected, a risk potentially on the downside for US inflation. But I'm a little bit less dovish on that, and I'm wondering whether perhaps maybe inflation could actually show that it's becoming a little bit more resistant to some of the activities in the market for central banks. In other words, I'm not completely convinced that we do have an interest rate cut coming in March this year. But today's data will go a long way to prove otherwise that we could well end up getting an interest rate cut in March. I think 1:30 p.m. today is the time to watch out for. And we will be live on the IG platform at 1:30 today when we'll take a look in some more detail about what we got in terms of that inflation number and what it could mean for the outlook for Fed interest rates. That's 1:30 p.m. today with Angeline Ong on the IG platform. Now, the Securities and Exchange Commission has finally given Bitcoin ETFs the green light. Late on Wednesday, the US Securities and Exchange regulator approved 11 applications, including those from Blackrock, Fidelity, Invesco and VanEck. Most of these products are expected to start trading today. Now, what could it mean for Bitcoin trading? Well, ETFs offer investors exposure to Bitcoin without directly holding the underlying security. Earlier this week, analysts at Standard Chartered estimated ETFs could draw $50 to $100 billion this year alone. As of Wednesday, Bitcoin market capitalization stood at 913 billion. Let's take a look at the chart for Bitcoin. This recovery that we've seen from the lows that we had all the way back in November 2022, we've seen a 209% increase. Now, interestingly for me, we didn't see much positive activity. We have risen a lot recently, of course, for Bitcoin. But the big question is now what next? Some regulatory experts believe other innovative crypto products could well follow. As from now on, it will be a lot harder for the SEC to say no to those, I suspect. So could we see further higher highs for Bitcoin? At the moment, not the case, but we'll have to see how things travel and what the appetite is now for these ETFs. Take a look at some of the corporate news headlines. I want to begin first of all with Tesco. Yesterday, we saw big declines for Sainsbury's on concerns about its general merchandise business, despite the fact we saw good grocery numbers. But Tesco today has raised its profit outlook for the second time in 4 months after reporting better than expected sales up to and through the Christmas and New Year period. Let's take a look at the numbers. The UK strong market share performance up 15 basis points to 27.9% up in the 4 weeks to Christmas. Like-for-like sales up 7.9%. Christmas like-for-like sales up 6.8%. Market share, as I said, improving. 6 weeks Christmas like-for-like sales increasing 6.8%. Expects retail adjusted operating profit above the previous forecasts of 2.75 billion. Above the previous guidance range of between 2.6 and 2.7 billion, resulting in strong retail cash flow, the company says, a generation of around 2 billion sterling. Let's take a look at the share price chart for Tesco. We saw a dip yesterday. I think this is in sympathy with the number that we got from Sainsbury's. Is this an opportunity to buy the stock? I suspect almost certainly it is, if indeed it comes to pass ultimately that we do end up getting better than expected performance in terms of earnings. But it's what the company says, so we must be guided by that. So at 296, if you're long on this, stop goes underneath the 290 level, which would take us then back to a level not seen since the beginning of this year. But things looking particularly strong, I think, for Tesco. M&S, meanwhile, food sales for the trading statement out for M&S, food sales increasing 10.5%, with like-for-like sales up 9.9%. Clothing and home sales up 4.8%. Better than we saw yesterday from Sainsbury's. Like-for-like sales also up 4.8%. I think I'd be inclined to go more to M&S from a personal point of view to get clothing than I would necessarily from Sainsbury's. Sainsbury's performing particularly badly in this area yesterday, so this is a big improvement on the numbers we saw from Sainsbury's yesterday. M&S saying expectations for growth remain uncertain, and I think that's really one of the big headwinds that we've got for the retail sector overall. Consumer and geopolitical risks, the company citing, also facing additional cost increases from higher than anticipated wage and business rates related to cost inflation, which the company is worried about. Let's take a look at what we got in terms of the moves on the share price for Marks and Spencer's. From the low point of last year, the 3rd of January 2023, to where we are at the high point, 128% up. A couple of days on declines. But as I said, these numbers are better than Sainsbury's yesterday. So at 279, are we looking to buy this or sell it? Go long with a stop below the 170 level, down below this area down here. We're stopping that sort of area down here with a view to taking this up. Now, if we do get a beat of where we were just a few days ago, which were recent highs, this would be the highest print we have on M&S shares, not seen since the 27th of February 2019. M&S, I think, performing better, as I said, than we saw yesterday from what we had from Sainsbury's. Meanwhile, we got third quarter trading statement out from Whitbread as well. The hotel business continued strong performance in the UK and encouraging performance as well in Germany. Let's take a look at the numbers. Third quarter fiscal 2024 highlights. Total sales up 11%, like-for-like up 8%. Premier in UK total accommodation sales doing very well with strong demand in both London and the regions. Total RevPAR, this is revenue per available room, up 9% in London and up 39% in the regions. Food and beverage sales up 6%. Premier Inn in Germany, total accommodation sales up 47%. The £300 million share buyback program is on track, the company says, with 6.8 million shares purchased so far for a total consideration of 226 million. The effect of that is to take shares off the market, which has a supportive effect. And you can see that supportive effect has been given from investors generally over the last couple of years or so. Let's move that out of the way and take a look at where we are. 35.47. If you're long on this, stop goes underneath 35 pound level, with a view potentially to taking up to recent highs at 37.06. Just a quick scoot back in time to check on where we were with the trading of Whitbread. If you rise above the 37 pound level, which is not too far from within sight at the moment, you're then on the way then to levels not seen since the big declines that we saw in COVID back in March 2020. So Whitbread not doing too badly, and the numbers out this morning not looking too poor either. Let's stay on the charts and move on to what's happening with Taylor Wimpey. Remember yesterday we had news out from Taylor Wimpey's arch rival Persimmon, and the stock was actually up on the session yesterday. We saw a positive broker note from Barclays on the sector yesterday. You can see the rise that we saw yesterday in Taylor Wimpey. The company says this morning, we're pleased to have delivered a full year performance in line with expectations. How can you be pleased when you only rise up to expected news? I'd be more pleased if I saw a better than expected number. I'm not completely convinced by the Taylor Wimpey update this morning. They're hiding in some respects behind planning systems. They say that planning remains slow and continues to impact outlet openings as material delays in planning and technical determinations persist. But look, this company's got 80,000 plots. It should be building land. It should be building houses, I beg your pardon, on land it's already got. And this is the main bugbear of politicians, is the fact there's just not enough being done by these house builders to start to build and make sure that they keep up with the demand that is out there for new homes. Nonetheless, group completions, 10,848 last year, but that was down from the 14,154 we saw last year. I continue to expect full year group operating profit to be at the top end of the guidance range of between 440 to 470 million. We knew that already. What's going to happen with Taylor Wimpey at the start? I'm not completely convinced. It's an uphill, market story this morning. That being said, the FTSE is performing well. FTSE 250 also expected to open higher this morning, so there might be a little bit of an uplift because Taylor Wimpey is part of the FTSE 100 complex. So that could give a little bit of an uplift, but I'm not completely convinced by the numbers that we've seen out there this morning. Take a look at what's happening in other areas of the market. Just to quickly run through what's going on in the oil market before we take a look at yesterday's EIA numbers. This is where we are in US crude at the moment. We continue to be within the confines of this symmetrical triangle. We're up in today's session after yesterday's losses. Yesterday afternoon, the EIA weekly inventory data showed a rise in stockpiles across the board. Crude oil stocks up by 1.3 million barrels last week. This has an effect of giving more supply in the market, which means prices were down yesterday. Gasoline inventory is up, distillate stocks up, all meaning that there's a lot of oil in the market for the demand to be satisfied. I want to quickly return to the charts to take a look at what's happening with gold. We're up today. This is the strongest day that we've seen on the upside in gold since the 27th of December. Some of that is due to the fact we've got a weaker US dollar. Anything priced in dollars goes up when you get a weaker dollar. And this is, I think, is part of the effect that we got at 2034. But I want to follow up as well and stay on the charts to what happened with this copper chart, because we've now got this corrective phase underway on this move I've been highlighting on the Elliott wave, the impulse 5 wave up. Technically, from a technical point of view, we are expecting this to show a 3-wave correction. We're now apparently on the way up after having hit that first wave down, and that would be exactly what we're expecting. How far up that goes depends. If we do beat the 5 level, then of course it then becomes not an Elliott wave, but just another wave in a larger, longer picture. So this is Bit of speculation on my part as to where that's going to end, but we do have an opportunity here to buy this at the moment. So I'm looking potentially for further upside to go on the price of copper. Your stop goes underneath the underside of where this A is at around about the 100-period moving average, which is the blue line here at 82.90. That's where your stop is, 84.28. How far up you buy this depends on when this rise stops and starts reverse again. But ultimately, if we do get this corrective phase working out as an Elliott wave, would the technical rules, if you like, apply, we would end up with C somewhere below A, with an opportunity then ultimately, potentially then to buy this, and where that goes remains to be seen. But this is all part of a longer-term picture where I think copper, fundamentally at least, remains undersupplied in the market in the longer term. We're just using far too much copper than we've got at the moment. So the bottom line is there will be a rise at some point. Fundamentally, it's a question technically as to how we get there. That's it. It is 10 minutes to go before the start of today's European session. Looking for stronger gains across the markets in the European session today. Just the German DAX up on the year to date, but we could well see that change today depending on how strong this move up is at the moment. But it's all around this pivot point at 130 today with US CPI, and that could change the entire market field today if we get a stronger than expected number on US inflation. We're back at 10:30 with Charting the Markets and live on the IG platform 1:30 with that breaking news on US CPI.